and good morning, and welcome to the VSA Capital 5-Minute Morning Miner on Monday, the 17th of November. And it's a beautiful sunny morning, but it's going to start to get a bit cold. Pool 1-to-1 starts this week, so there's going to be lots of companies there talking. All be pretty happy, really, because we're in a mining bull market. They're all pretty much cashed up. And actually, you'll be with other colleagues the rest of the week, Paul, because I'm off to Dubai to catch up with Origo, my autonomous airside company, at the Dubai Air Show, and then briefly jumping on to India afterwards to meet up with Atri. Anyway, let's kick off this morning. Actually, let's just cover a couple of VSA clients that had news at the back end of last week that we didn't really quite manage to cover. The first one was Sierra Madre. Actually had Q3 results, didn't they?
Yes, they did, and they were pretty strong ones too. Again, Sierra Madre is more or less in ramp-up phase on that deposit of theirs, Lagotara, and net revenues for Q3 came in up by 3% to $5.5 million, or just shy of $36 per silver equivalent ounce. So that was just a little bit higher than it was at the end of the June quarter. Cost of sales $3.82 million on the quarter, or $24.85 per silver equivalent ounce. So that was just a slight rise as far as the silver equivalent ounce cost of sales sold. All-in sustaining cost $34.42 compared to $30.10. And current assets, including cash, now just shy of $17 million. Have made an awful lot of improvements to the operations capabilities here, also in this latest quarter, with $2 million of equipment purchases. And they shipped about 800 dry metric tons of concentrates as well. So that was an improvement as well on the second quarter. So making good progress by all appearances.
Yeah, and talking of progress, of course, Myriad Uranium, also a client of VSA, on the TSX, their uranium explorer in Wyoming. They've just closed their latest financing, haven't they? Which has been holding the stock back. I think this will let the stock run a little bit.
Yes, that's right. The gross proceeds raised Canadian $8.6 million at a price of 40 cents Canadian per unit. So this is a nice top up on and gets them well financed for essentially all of their 2026 exploration spend to come there on their Wyoming uranium projects.
Yep. There was, I don't know if you spotted it, but I noticed that Pensana this morning upgraded the size of their rare earth project.
I missed that one myself.
Yeah, I thought you had, Paul, but they did, and that stock's risen a bit today. I mean, just be a little bit careful. I know all the rare earths are performing phenomenally. They probably will for another 12 months, in truth. But the reality is rare earths are not as rare as you think. Back in the heydays, at the beginning of the turn of this century, I think there was like 600 quoted rare earth companies. So just be slightly careful. Paul, anything you wanted to mention?
Yes, in that regard to rare earths, we do have a tech innovator in that space listed in London called Cobra Resources. They put a statement out today that their permeability test for in situ leaching of rare earths, that is essentially trying to develop the technology and the practice of leaching in place rare earth mineralization as opposed to having to dig it up in the same way that uranium is leached in situ as well. And their permeability tests on the Bolin rare earth project in South Australia have come out to essentially very much better than expected from what they said. What they did is they injected some fluids down into the potential production reservoir with the leachate or lixiviant, which is intended to remove rare earths. Now, the testing was not about what the recovery of rare earths would be at this point, but whether or not the fluid passes through the rock appropriately in order to be commercially viable. And all the indications are it's going to leach just like uranium does with recovery of the fluids coming through in a matter of just a couple of days. So that's the latest threshold for this kind of world-leading technology in mine production.
We love a bit of technology in mining. Actually, I tell you one other that caught my eye. I noticed that Sunrise Energy out on the ASX just raised 45 million Aussie dollars. It's backed by Friedland. But what is interesting is that actually it's up tenfold in the last year. That placing was done at $4.25. Back in June, it was at 30 cents per share. Just, and it raised 7.5 million then. I mean, people have made a lot of money out of this. It's scandium. Whoever thought we'd be talking about scandium on the 5 Minute Mining Miner? What do you use scandium for, Paul?
Scandium is an alloy in aluminium, particularly, so the aircraft industry in particular would like to see a lot more scandium in the marketplace at a cheaper price than what it's currently available to use it more.
Interesting. Have you got anything else?
That's all for me today.
Just a final one from me, and I know we've talked about it all last week, and I promise not to talk about it again. I won't because I'm off. But I noticed that Tamar Resources, funny enough, on Friday, the volume really picked up and the stock started trading up at 3. Then this morning, someone's done a tiny little trade at 1, and the market makers have worked it down again. I would just say to the market makers, this sort of movement of 200% just because of a trade of £100 really doesn't do the market making system any good at all. We know there are some big buyers out there. Just collect some stock, market makers, and then offer it to us at a sensible price, and we can place it for you. This actually, unfortunately, sort of distorts the market. It doesn't help anybody. Anyway, there's my final rant. I promise no more ranting on that one for a little while because I'm away. On that note, thanks, Paul. You'll be with other people. I'll be back about the 26th. Thanks.
Very good.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.